Welcome back. Now let's get a look at how this market picture looks. Well, China's benchmark equities indices edged lower this morning, but they did manage to post their sixth consecutive weekly gain against the backdrop of easing Middle East tensions and signs, of course, then of an economic recovery and ahead of the signing of that Sino-US trade deal next week, finally. US President Donald Trump says that on Wednesday, he said that the United States did not have to respond militarily to Iran's attack, while Iranian Foreign Minister Mohammad Javad Zarif said its strikes concluded Tehran's retaliation. Investors were also then encouraged by modest signs of improvement in the world's second largest economy as Beijing began to roll out even more support measures for that economy. Well, here's the market picture. Japan's Nikkei index closing up around 0.5% by close of trade, 23,850 points. So a good close to the week as well. On that front, Hong Kong's markets as well, seeing some good pictures, 0.2% up there in a buoyant mood at 28,643. Unfortunately, though, the Shanghai Composite Index dipping down today, so not a good day for them at 3,092 points, but still managing to tick higher for the week, going up around 0.3% for this week. Let's head on over to Wall Street now, where those U.S. stocks registered record closing highs last night as optimism about a U.S.-China trade deal firmed up all of those things. And as Apple also and other market heavyweights posted strong gains, the Dow Jones Industrial Average rose around 0.75% to 28,957 points. The S&P 500 gained 0.2% to 3,274 points, while the Nasdaq Composite added nearly 1% there, 9,203 points. All right, let's take a look at how Europe is faring as well. That has, of course, been of quite important interest as well. That market has seen some good gains over the last week. On the local front, well, looks like we may end the week on a good note, even though it has been quite difficult of late. We had 2 days of negative trading, unfortunately, and that was even though we saw some sort of subsiding of the tensions between Iran and the United States. So the market, however, on the local front, managing to find the steam there to end on a positive note by the seams of things. Look, it is still halfway through the trading day, so we'll see how things fare a little bit later. 57,432 points there. Over onto the commodity shares, well, you're seeing only the gold sector going down. And a lot of that is because investors had gone in heavily into the gold shares and gold itself, particularly after January the 3rd, when, of course, that Iranian commander, Qasem Soleimani, was then hit in Baghdad by U.S. forces as well there. A lot of that meant that investors were fearful that the price of oil, emerging markets, and even strong markets would certainly begin to falter, and they all went into gold or perhaps even the Japanese yen as a safe haven to try and mitigate their risks. But now they're all pulling out because things seem a little more hunky-dory, shall we say. For now, this is the state of the market. The platinum shares also going high. They have gone up nearly 200% in 1 year. That seems to be continuing in the right direction. Let's take a look now at your currency as well. It's 14.21 for a US dollar. So some important factors here is that we started the year at 14 Rand. The hope is that we'll dip below that mark this year. But let's remember, of course, that we are in a time where things could get very difficult. Yes, we've just had the tensions with the United States, and that will tell the picture. And that will continue to tell you why the Rand is at 14.21. We do have the January 8th statement, then, of course, by President Cyril Ramaphosa. Will they be able to fix the country? He gets to firm up that message at the State of the Nation address. But he also does, of course, then have next week to contend with, where the South African Reserve Bank will be deciding on whether to cut interest rates or not, given that they may have a little bit of room to do so. And then we have budget in February. Of course, the Finance Minister, Tito Mboweni, will have a hard task ahead of him there as well. And then Moody's. They'll need to decide whether South Africa should be downgraded any further or not. We're getting to 60% of GDP when it comes to our debt, and just with how difficult things are on the local front, it means that we may even test 80% of GDP, at least within this decade. All right, let's take a look then at how your commodities are also then faring. It seems that the oil price continues to head higher. This had a massive gain as well over the last year, sitting around 60-70% odd better off than it did at the beginning of 2019. One of keen interest as well, with not just platinum, has been palladium. I had that discussion as well yesterday with Owen Nkomo from Nkunzi Invest, and he really noted that, of course, the price of palladium now becomes the most expensive commodity, particularly out of the top four as well. And that tells you the story then, that a byproduct has become so significant. Where to from here for that price, though, is the question. Around $2,100 a fine ounce on that front there. More than $1,500 then for gold. Hopefully it remains there as investors begin to pour out, of course, as risks continue to run amok there. All right, let's continue then with the European markets. As I said, some green coming in there. A lot of investors perhaps feeling a little more calm and a little bit more reassured as to the state of proceedings and how things are faring on the international front. And that has been of keen interest. Now, one other point I wanted to just quickly add has been, unfortunately, the telcos in South Africa's market. That is what we're getting, though, is a sense that many people in South Africa are, of course, asking for a drop down in data, and that is beginning to hurt those prices. Then the share prices, that is, of the telecoms companies themselves, and hopefully we can get a sense of just understanding how things have fared. It has been a turbulent time, and they've increased volatility across the year. So it has been extremely difficult to find one strategic method to move on forward. The price of Telkom itself dipping below 30 Rand a share yesterday. That is a massive 70% drop since July. And that means that the price itself then has capitulated in that meantime. The question was as well around November and December that they had tried to make the purchase of Cell C. That didn't fare as well as one would have hoped. And one begins to wonder that even though Cell C has a debt burden of around 9 billion Rand, that perhaps Telkom needed Cell C a little bit more than the others. Let's very quickly just check in on that Vodacom share price over the last year as well then. The volatility has been evident, and this is exactly where the price has gone to then over the last couple of years, from around 135 Rand a share around 111 now. But look at that. The entire wave. That is, of course, the peak that happened around a year ago as well. So clearly they're trying to find a way to perhaps get things going. And at this stage, we then, of course, saw that report then by the Competition Commission coming out and hurting the telcos, because at that point, they needed to reduce data. They have about a month left to do so. And hopefully the question becomes where to from there if they continue to fight it, of course. We do continue to try and get more analysis on exactly where we sit when it comes to the telcos, and hopefully we can get the graph of either MTN or Vodacom, or should I say Telkom as well then, and get a sense of where things sit on that front. We do have MTN, so we'll get into that one now as well. And just look at this massive fall, 30% from its peak that it reached just around July last year, and a massive fall as well around that November period, as I said, after the Competition Commission told MTN and Vodacom to reduce their data prices because they were hurting consumers and not competitive enough for the industry. So that also continues to show you volatility around MTN as well. So Telkom has unfortunately been the worst of them all, from that peak of nearly 100 Rand then at the middle of last year, now sitting and dwindling right around that 30 Rand a share mark. It is very difficult for one to see where the hope lies, where to from here. And as a play that is 40% owned by government, perhaps not necessarily the greatest investment right now. We'll give you more business news right after the short break. Do stay tuned to On Point. For now, however, that's where the buck stops.